Hi students, welcome back. As you remember, in the last video I talked about the straight line depreciation method, and we are still left with two other depreciation methods, that are the units of activity method and the declining balance method. So in this video I will be discussing on the remaining two. So without further delay, let us start the lecture. Units of activity method is another way of calculating depreciation expense of a plant asset, and here we again need the same three informations, that are the cost of the plant asset, the useful life of the plant asset, and the salvage value of the plant asset. However, in case of units of activity method, the useful life is expressed in terms of total units of production or use expected from the asset rather than the time period. So units of activity method is more suitable for factory machineries, and it is not actually suitable for buildings or furnitures which cannot be expressed in units of activity. So under this method, we actually do the same thing. The first step is to determine the depreciable cost of the plant asset. And how do we do that? We deduct the salvage value of the plant asset from the cost of the plant asset in order to get the depreciable cost of the plant asset. And, and with the depreciable cost of the plant asset, we divide the total units of activity that is expected from the plant asset in order to get the depreciation cost per unit. So after getting the depreciation cost per unit, what we do is that for each year we have a certain units of activity that will be completed by the plant asset. So we multiply the number of units to be produced by that plant asset with the depreciation cost per unit in order to get the annual depreciation expense for that year. So this is how we do it, and you can understand that since the units of activity that will be done by a plant asset each year may vary, so here the depreciation expense will vary from year to year. So like straight line depreciation, we will not be having only one on the similar or the same depreciation expense for all the years during the useful life. And in this case, the units of activity method is also referred to as the units of production method, and these two can be used simultaneously. So here we have the same illustration that was of Bob Florist, and Bob Florist purchased a small delivery truck on January 2020, and the cost of the truck was $13,000. The salvage value was $1,000. A useful life was 5 years, and the estimated useful life in miles was 100,000 miles. So we use this information in case of explaining the straight line depreciation method, and for the next two methods we will be using the same information. Just like straight line depreciation, the first step in units of activity method is to determine the depreciable cost. And how do we do that? We deduct the salvage value from the cost of the plant asset in order to get the depreciable cost. And for this illustration, the cost is $13,000 and the salvage value is $1,000. So we deduct $1,000 from $13,000 in order to get the depreciable cost of $12,000. After getting the depreciable cost, the second step is to divide the depreciable cost by the total units of activity for the useful life of the plant asset, and by that we determine the depreciable cost per unit. So here we are more interested to know what is the depreciable cost per unit. So in order to do that, for this illustration, what we did is that we had the depreciable cost $12,000, and with that we divide 100,000 miles which was given for the delivery truck, and we get the depreciable cost per unit as $0.12. So after we get the depreciable cost per unit, the third step is to determine the annual depreciation expense, and that is done by multiplying the depreciable cost per unit with the units of activity during that specific year. So in this case, we multiply the depreciable cost per unit, that is $0.12, with the first year's unit of activity, that is 15,000 miles, and we get the annual depreciation for the first year as $1,800. Here we have the depreciation schedule for barb florist, and it has 6 columns. So we start with the year. We have 5 years here, and the units of activity per year is given here, and you can see that we have different units of activity each year. And then we have the depreciable cost that was calculated in the previous slide, that was $0.12 per unit, and by multiplying the units of activity per year with the depreciation cost per unit, we get the annual depreciation expense, and it has different figures in each year. Then we have the accumulated depreciation, and this is calculated by adding the current year annual depreciation expense with the previous year's balance of accumulated depreciation. And in case of 2020, since there was no previous balance for the accumulated depreciation, so the annual depreciation expense and the accumulated depreciation has the same figure. However, in case of year 2, that is 2021, the previous year's balance of accumulated depreciation, which was 1,800, was added with the current year's annual depreciation expense in order to get the the accumulated depreciation for 2021, and which comes to 5,400. So this is how we calculate the accumulated depreciation. This is the addition of the current year's annual depreciation expense with the accumulated depreciation of the previous year. Then we have the book value of the plant asset, and if you can remember that the book value is determined by deducting the accumulated depreciation from the cost of the plant asset. So here we have $13,000 minus 1,800, and that comes to 11,200. In case of the second year, it is 13,000 minus 5,400, and it comes to 7,600, and in the same way it is calculated. And at the end of the year, the book value should be equal to the salvage value of the asset, and that is important. So this is how we calculate the book value, the accumulated depreciation, the annual depreciation expense in case of units of activity method. And it is worth mentioning here that even though this seems to be easy to use, however, due to certain difficulty in reasonably estimating the total activity of a plant asset, it is not as popular as the straight line depreciation method. So the last method of depreciation is the declining balance depreciation method, and as the name says, it produces a decreasing annual depreciation expense over the asset's useful life. And how do we determine the depreciation expense in this case? We base the calculation on the book value of the asset rather than the depreciable cost. So in this method, the depreciation rate remains constant from year to year, but the book value at which the rate is applied declines each year. if you can remember that in case of the other two methods, when we calculated the book value, we saw that as the accumulated depreciation was increasing each year, the book value were coming down, it was decreasing. So when we are calculating the annual depreciation expense based on the decreasing book value, we will get an annual depreciation which will be decreasing over the years. So how do we calculate the declining balance rate? So it is a constant figure and it is determined by only multiplying the straight line depreciation rate with 2. So in case of a declining balance depreciation method, if we want to determine the declining balance rate, what we do is that we just multiply the straight line depreciation rate with 2 and we get the double declining balance. So in case of the last illustration, if you can remember, the straight line depreciation rate was 20%. So if we think that we want to know the declining balance rate in case of the same example, we just multiply 2 with 20% and we get 40% as the declining balance rate. So it is important in this case that since we are not using the depreciable cost as the basis for calculation, so here the salvage value is being ignored. However, the depreciation calculation stops right when the salvage value is equal to the book value of the asset. So rather than saying the salvage value equal to the book value, we should say that when the book value is equal to the salvage value of the asset, and then we know that this is the end of the useful life of this asset. So this is how we calculate the annual depreciation expense in case of declining balance method. Here we have the depreciation schedule for barb florist. The same example we are using for all the three methods. And as you can see, we have this depreciation schedule which consists of 6 columns. And initially we have the year, then we have the book value of the beginning of the year. So if you can remember, in case of the other two methods, we had the depreciable cost here. However, in case of declining balance method, we have the book value, and the beginning balance of the book value is taken as the basis of calculating the annual depreciation expense. And then we have the depreciation rate, which is equal to the straight line depreciation multiplied by 2, and we have 40% here. And then we have calculated the annual depreciation expense, and if you can see that since the book value of the asset has been declining over the years, we have the annual depreciation expense declining as well, because we are just applying a constant rate on the declining book value, so we are getting a declining annual depreciation expense here. So the same way we are calculating the accumulated depreciation, and as you can see, for the first year the annual depreciation expense is equal to the accumulated depreciation because there is no previous balance of accumulated depreciation for the year 2020. And in the next year, as you see that we have a accumulated depreciation of 8,320, and it is derived from adding the current year's annual depreciation expense with the previous year's accumulated depreciation, which was 5,200. So in this way we calculate the accumulated depreciation, which is the same as the other two methods. And the book value calculation is also the same, and that is we deduct the accumulated depreciation from the cost in order to get the book value of the share, book value of the asset. And in the last year, as you can see, as we have said, that the depreciation calculation ends when the book value is equal to the salvage value. You can see that that is what has been done. However, in case of the last year, when we multiply 40% with the beginning balance of 2040 book value, for 24 book value, we get a figure that is somewhat different from what we have here. So the computation of this is actually comes to $674. However, it has been adjusted to $685 in order for the book value to equal to the salvage value. So when we have this kind of different figure, when we calculate this multiplied by this, we will have to adjust it in such a way so that the remaining balance becomes the salvage value. So this is what we did here. So with this, we end the depreciation methods, and we have learned 3 depreciation methods in this chapter. We have talked about how to determine the cost of the plant asset, and we have talked about what is depreciation, why is it important. And with this, we end the chapter actually, because in this chapter, as we have said in the first slide, that we were only expected to cover the different depreciation methods and how to calculate depreciation under each method. And I hope all these lecture videos were helpful for you. And thanks. I will see you again in the next chapter.